Hello, everybody. We got people coming in. What managed? I know I've muted everybody on purpose, but at this point, I'm like, I want to talk to people. I hope everybody's doing well today. And let me know in the comments where you're chiming in from as we wait for a couple minutes for people to join, because I have to let them in from the meeting room or the waiting room, I mean. Southern New Jersey. Didn't realize you had to specify end of New Jersey. Ventura, is that close to fires going on right now? All right, we got some Michigan, Georgia. Woo! Chrissy, how did you like Georgia's snow day on Friday? Did you do a snow angel? Because I did. Hey Kim, how are you? Haven't talked about. Ooh, another New Jersey. Oh, that's nice. Okay. We have got a crowd for that. Excited. Ooh, Florida weather. I feel like Jackie, is the weather really nice in Florida right now? Because I have been fantasizing about being on a beach a bunch. Even though the cold weather has been nice, I would like to be on a beach. Ooh, Texas. All right. That is a bold and exciting Texas, all caps and 4 exclamation points. Okay. Well, I'm gonna give it like 1 more minute before, because I get dinged every time people come in. I don't know if you guys can hear it on your end. Um, oh, that is so cold for Florida. 40s and 50s? I feel like that's freezing. That might as well be freezing for Florida. I think I remember going in November and it was like 75 and nice. No, the Panhandle's nice. I have my in-laws had a couple of beach houses there many years ago, and that was my first experience with Florida. Was just close to, it was in Panacea, just close to Apalachicola. So when I first moved here, you guys, I'm from Canada, and so I moved here like 10 years ago, and I could not believe the number of country music references, like to places that I had absolutely no understanding of where they were, because I never thought to Google them. And Apalachicola was one of them, from like a Tim McGraw song. And so when I got to go there, it was very exciting for me, and I just couldn't. It was great. Don't worry, we will talk about taxes at some point, I promise. I see that there was supposed to be 30, like, one people coming, and we have 15. So I kind of know that they're, oh, 36 now. Damn. 37, it just keeps updating. Um, Carrie, my girl with the video. Favorite. It is so much nicer to talk to faces than black screens. So thank you, thank you. I don't know how many of you follow me on Instagram, but like an hour before I was just killing time before this meeting, I was kind of going through my reels again and just laughing. But if you guys don't follow me on Instagram and haven't just like binge watched all sorts of like the content there. Like one, super informative from back in the day when I was doing more marketing. And it's informative and funny. Well, I think it's funny. And you guys can either correct me or not on that. But there's a lot of good stuff there that, I mean, I know we're going to cover a lot, but there's a lot of really good reminders in a really easy to digest manner. And so even though I'm going to try my best to try to have this whole presentation be not boring and droning on and on like a boring accountant, I can't make any promises for that. So, all right. Well, we have 16 people. It still says 37 registered. I might just try to get started. Kim, my girl, how are you? Kim and I met at the TPT conference in 2021. Is that right, Kim? And we have been in contact maybe like once a year since, which is super nice. One of the reasons I like enjoyed the TPT conference. Is anyone planning on going this year? I think it's in Nashville. Show of hands. I don't know if you guys are familiar with Zoom, but you can do, there's like a react little button and you can like raise your hand. Ooh, nice. All right, Christy and Kim are going. Love that. Very exciting. All right, it is past my 5 minutes of buffer. That's for any of you that work with me, I have like 10 minutes max in 5 minutes in tax season of waiting for people before I just tell them to go to like reschedule. Because timeliness is a virtue, I think. Marcia, I am a TPT seller. However, what I sell are things for other TPT sellers. So All About Accounting does have a TPT store, and it has some of our products in there for sale. Just hoping people kind of stumble across it if they haven't heard of us yet. But it is not like geared towards kids. I don't think I'm interested in I'd rather adults. I had a really nice message from somebody one time that said, like, she's like, "Oh no, you're a teacher. You just teach adults about taxes." And so then I'm like, "Oh, that's so nice." And I do kind of think of myself that way a little bit, as being able to offer lots of information. Okay. Promise I am getting started now. So let me figure out what I'm doing here, because I've got multiple screens with multiple things going on with multiple, all the things. So I'm going to figure out how to present this presentation that I created today, everybody, because in case you watched my Instagram story today, I was planning on just doing a kind of fly by the seat of my pants and what's the word I'm looking for? Oh no, just a second. I was gonna fly by the seat of my pants and hope that it shoot. Don't worry, everybody, you're doing great. I can't hear any of your laughs at me right now. Present. This one's getting moved over. Full screen. Here we go. Okay. Bunch of coordination happening. Screen 2. Okay. Does everybody see my screen with my face on it? And get ready for tax season. I need to figure out how to pull up the comments because I can't see those while I'm doing it. There we go. Oh, Megan, you're the best. That is an excellent comparison. Part of why it took me so long to like figure out like a day was to try to figure out how to register everybody and how to do that without going nuts. So Awesome. Okay. I think I'm ready. At long last. We've got no other stragglers, or well, we might. Okay. One more quick little adjustment on my screens here. There we go. Okay. You'd think that I could have had that all figured out in the beginning, but Zoom moves everything around. All right, so this is, thanks, Jackie. This is our get ready for tax season, very impromptu. I've slapped together some slides to hopefully help make it easier to follow. And so the whole thing is to hopefully answer everybody's questions at the end, or as if it makes sense to answer some of them as I'm going, I'm going to try to answer those. We also have a backlog of some that people posted on Facebook that I'm going to answer at the end also. But for now, let's get started. For those of you that don't know me, hi, I'm Emily. I'm a tax professional and advisor. I'm an enrolled agent. So that is a tax-specific license issued to me by the IRS. And basically it just means that I have passed 3 exams. I have to take continuing education that is very tax-specific. And that is different from a CPA because I care about taxes. Not every CPA cares about taxes. In fact, it's quite common that you'll find a CPA and they will not be doing their own taxes because they have no idea how to do it. Because that's not what they specialized in. They're in audit and corporate America, that kind of stuff. I'm also the owner of All About Accounting. And this is what we're hosting now. So this is hopefully you guys kind of get to know me and our services and all of that, and how we can help you throughout the year. Currently a team of 2. Jonas is my right-hand man. He helps with the bookkeeping and the tax prep also. So he went to school for accounting as well. And it's been great. I'm also a handy woman. This is a little fun fact about me. I have been renovating my main level of my house for a good while now. And doing it like all from scratch. So it's all by myself, all from scratch. And if anybody can guess correctly or get within, let me say, 20 days of how long I have been working on my kitchen for, you will get a free tax efficiency analysis. So you may go ahead and guess, but like by the end of the call, I'll just send you a message after. And then you guys really want to know, you can ask me. Oh, it's way more than that, Marcia. I'll tell you that. Keep going up, plus. It's been a good while. Days, Kim, days. Yeah. All right, so quick housekeeping. If you're able to and comfortable, turn on your video. It's really helpful for me to not feel like I'm just talking to a bunch of blank screens. Getting reactions are super helpful. Otherwise, I just feel like I'm laughing at myself. Yeah. Number 2, questions. You can put them in the comments. And although maybe wait until after all the number of days is are guessed out. But if you do have one that's like gonna take like longer and more immediate, like sort of interrupting like the thought that I'm having, and you want it to kind of like be known, use the reactions in Zoom. I don't know, there's like a reactions button where you're able to raise a hand. And then I will call upon you. I will then figure out how to unmute you while I'm screen sharing. I think I can, yeah, I can ask you to unmute and then you'll unmute and then you'll just ask your question. And that's the best way to do that, I think. Also, this is for general advice. So if you have things that are like hyper specific to you, schedule a discovery call with me. Let me see how I can help you in that way. But if this is really meant for like a very general topics, not necessarily your tax situation very specifically. All right, also please be patient with me. I'm trying to read and talk and add people into the meetings and do all the things as best I can. And my favorite part about working with teacher sellers is their teachers. And so as was it Megan that told me that said that? Yeah, Megan, who's like, everybody has kind of gone through the COVID virtual teaching and trying to figure it out. And I don't host a lot of these. And so this is kind of my first one where I'm doing all the things at one time. So thank you for the patience. All right, what we're going to talk about here is sources of income, what things are tax deductible, tools for tracking. We're gonna spend like really only like 5 to 10 minutes on non-US sellers and the US tax obligations, because I think that is an area that has just not been talked about at all. I mean, I have not talked about it. And it is something that people have asked for. So I have a couple little slides that just like help the sellers, like the Canadian sellers, Australian sellers, all of the sellers from that are not US based. And then we're going to get into the Q&A. So we're just going to fly out of them. All right, sources of income. So obviously you've got your teachers pay teachers income for those of you that do sell on teachers pay teachers. Some of you might be, because this is like open to the the teacher seller community. Some might not necessarily have teachers pay teachers income. They might be selling on Etsy. Ooh, let's see what I do. Selling on Etsy, Kajabi, Boom Learning, their own website, Classful, made by teachers. Maybe they're offering like VA services. Selling on Teachable, doing product photography services, email marketing services, all of those. I mean, I know you guys have seen like the VA Facebook groups. All of those things are sources of income. And some people have only one, some people have multiple. There might be even like affiliate, like Amazon affiliate marketing, or even just any, like, I think I've also seen like TikTok affiliate marketing. Any money that you make in your business is income. So like money that you receive is income. But you cannot just report your payout. So TPT sends money to your bank account, right? It's the earnings. So sometimes I always have to ask my clients, like, or people that I'm having a conversation with, what are you talking about? Are you talking about your earnings, or are you talking about your gross sales? Because those are two different things. Your gross sales is the full amount of what you've sold. TPT does a really good job at marketing your earnings because they want you to forget all about the commissions. Because if you look at your gross sales less the commissions gives you your earnings, it's kind of like sad to look at sometimes, or it can be discouraging. And so they, like rightfully so, try to get you to not look at it. However, it is definitely still like the commissions are still a deduction. You still made more, those gross sales. So you've got to make sure that you're reporting them at the gross amount. And then you can deduct the commission. So those are the amounts that TPT like pulls out for all of their like transaction fees and all of that. And then there's like can be other fees too, like listing fees, like for Etsy, any marketing fees that you might have in there too. And like payout fees, all of those things go from like gross sales, commissions, like other fees, gets you to your earnings. So just be aware that it's your gross sales here that we really care about. We also care about your deductions too. But the reason we care about the gross sales is because you're going to get these forms, either a 1099 NEC if you're like providing services like as a contractor, or a 1099K if you have any sort of payment processor payouts like Hyperwallet, like for TPT. You might not necessarily get these forms though. So just kind of be mindful of that. There's certain thresholds that you need to meet for that. So we want to know the gross because the gross is going to be reported on here. So if in your brain you're like, oh, my earnings, they're only going to, like, you've only been thinking about your earnings, and then you see your 1099K and you're like, oh, I made so much, those are my earnings, like, okay. And then you don't even realize that you still need to deduct your commissions. You're losing out on a huge tax deduction for you because it's like 20%. So can you rely on the 1099s you receive? So either one of these 1099s. The answer is Absolutely not. For reasons that I just named, you might not have gotten like met the threshold to receiving it from like everybody that paid you. So like don't only rely on those. We do need bookkeeping, we do need some sort of system in place to be tracking all of those sources of income that I had listed out. And the other reason is that they could be wrong. The number of times that I have seen incorrect 1099s reported are a good many times. The biggest one being a $60,000 over reporting of income, and my client had no idea what like that had happened, and just sent me those. But I insisted on some bookkeeping and saved her like $15,000 in taxes. That's the bookkeeping. So we don't rely on other people's information. We rely on our own information, which means that we need to be compiling our own information via bookkeeping. Long-winded way to say have some bookkeeping. So will you receive a 1099? So obviously not everybody will. So for a 1099K, these are payments from processors, like payment processors. The threshold this year for 2024 is $5,000 or more in gross sales. Last year it was $20,000. It was supposed to be 600, but then they went back to 20,000, and this year it's 5,000. I think they're still like they're working on it. So this number, this threshold, keeps getting adjusted. And do we care about it though? Absolutely not, because we're going to be relying on our bookkeeping. The only time we care about it is if it's wrong. So you just want to double check to make sure that it's at least not over reporting. If it's under reporting, we don't care because we still report based on our bookkeeping. For the 1099 NECs that you might receive, these are, you would get these if you were paid $600 or more via cash, check, or bank, like your bank's online bill pay, anything. So if you are getting paid via Venmo, PayPal, QBO payments, any other sort of like payment processor that is like facilitating that transaction, that does not, like, you're not going to get a 1099. Or you shouldn't. Definitely shouldn't. Because that would be reported on your 1099K, and then you would be double reporting. So we want to make sure that those, like, you're checking those. Does that make sense? Like that last part of like the potential double reporting between these two? If you have a, like, because this is important for everybody. If you do have a contractor and you are trying to be the one issuing them a 1099, if you do it wrong, you could potentially be over reporting their income to the IRS and messing them up. Okay, thank you, Michael. All right, but even if you don't get any 1099s, you still need to report your income, even if you make $1. Okay, there is no threshold of like not report. You have to report it. All right, so where do these things go in terms of like your gross sales, gross receipts go on your tax return? So it goes on your Schedule C, line 1. So here, this is your Schedule C. And here is line 1. So it goes under gross receipts right here. Line 2 here is for returns and allowances. That is your refunds. Okay, so your 1099K that you get includes, Dominic, you should be seeing a PowerPoint. Does anyone else not see my PowerPoint? Are you just seeing me? Seriously?
I see the PowerPoint.
Okay, thank you,
Yeah,
Michael.
I'm seeing it.
Okay. Dominic, I
I
don't
just
know how
see.
to, you just see me?
Yes.
What if you move my face? Do you see anything in the back? I think there's usually like a second screen that pops up, or can be.
There's like a little gray bar you can pull and make her screen or her video bigger or smaller.
Got it. Thank you.
Christy, you're the best. Thank you, everybody,
No
for
problem.
this critical troubleshooting. Amazing. Ah, fantastic. All right. So back to refunds here. So on your 1099K that would get reported in these gross receipts includes any refunds that have not that were sold. So like if I bought a product from Kim would see like $50 from Emily, and it would be part of the 1099K that's on line 1 here. But then I'm like, you know what, Kim, I hated your resource. This sucks. I don't want it. Yeah, I can't even open the Google zip drive, so I don't even know if it's good or not. And then I want a refund, and so I get a refund. The refund now needs to go on line 2. Because you include it in the box in line 1 here, and then it gets removed in line 2. And so again, if we're going with our bookkeeping, we don't care about the 1099K at all. So if we do look at our TPT sales and earnings statement, just to try to kind of group all of this together here. The first thing I want you to pay attention to is the dates here. So some of you may be aware, some maybe not, but I'm going to say it anyways. As a cash basis payer, you pay taxes on the money when you receive it or when you pay for the expense. So for December sales, why this is December 1st, 2023, why these are this is offset, is because all of December sales don't get paid out until January of 2024. And so it's the same thing with November here, where all of November would get paid out in December. And so now we have all of the payouts for 2024, January through December. And so that's why it looks like that, is because they have it this way. First thing you should do when you look at this report is to actually just make sure that this number matches what you actually received in your bank account. Because if it does not match, stop there and go ask TPT what the heck is going on. Because that's your first sort of troubleshooting thing. Like if this number is wrong, the rest of these are wrong. And we don't need to start on figuring out if the rest of these are wrong when we can just hey, why don't they send it back to TPT to tell you why those don't even line up. So here, this section here, this is everything that goes on that line 1 that we talked about. Because it just totals here to the gross amount. And you see how it says here, the 1099K. This is why we need to back out the refunds, because they are originally up in here. Whoa, that wasn't supposed to happen. There we go. Refunds here, returns and allowances. That's our line 2 that we talked about. These are all your expenses. So TPT service fees, that is excellent rebranding on their part from commissions, because it's like you're paying for their service of using them. And transaction fees, taxes, these are, because it's included up in here. If you did end up having to pay any, you really shouldn't. But I think they include them anyway. So if they include them up here, we need to remove them down here. Because those are that's not income to you. That needs to be offset. And they should really be the same amount. These are also expenses. This is basically the promotions of paid earnings, or ads, payout fees. I would put into the commissions up here. And then the taxes. And then here you've got your premium seller membership fee. These should all these expenses and everything, this should all be part of your bookkeeping. You shouldn't even need to you shouldn't, honestly, you really shouldn't even really need to look at this a whole lot, other than if you're wanting to just kind of confirm some numbers. So on to business expenses. These can be things like your merchant fees, your home office, Canva, your website, Flowdesk, your laptop, LLC renewal fees, portion of your internet, contractors, commissions paid. All of those things that have in common is that there are 2 criteria to make an expense tax deductible in the US. Okay, it needs to be ordinary and it needs to be necessary to running your business. So I always like to use the example. I'm an accountant. You know how many ring lights I own? 2. Haven't used them in a while, but I own 2 ring lights. It's kind of weird for an accountant to own ring lights. That seems like a very like a marketing person would own ring lights. However, Instagram reels were a huge part of my marketing strategy a couple years ago. And so of course I had ring lights. I needed that. That was normal for the type of work that I was doing for my business. And it was necessary in order for me to produce the videos and the marketing that I wanted to do. So even though some things can be a little like, really? Like that's kind of strange. It still needs to, like, it still can fit. Like, even though, you know, you might know like 10 sellers who don't have ring lights, you're like, yeah, but I do, because it's part of my strategy, like my business strategy. So that's ordinary for my business or necessary for my business. Chicken suit here, I will comment. So like clothing, typically not a tax deduction, unless you're like putting your logo all over it. So this shirt with my face on it, I only wore this out in public once, and the TSA agent guy actually called me out on it, and I was a little embarrassed. I didn't think it looked that much like me, but neither here nor there. So clothing, not typically tax deductible. Like it has to be something so outrageous that you wouldn't wear every day. So this chicken suit would qualify if I had actually bought it for business purposes. However, I did not. I used it for my Halloween for the last like 7 years. So this, not a tax deduction for me, but if you had done like had a costume or something, either for your marketing or for something part of your products or anything like that, those could qualify. It just wouldn't, it just, you can't have the clothing be something that you could use every day and it would be normal or considered normal. In Canada, my home and native land, the qualifications for what is tax deductible is it needs to be reasonable current expense that you incur to earn income. That sounds pretty similar to this one. Same with the Aussies. In Australia, it's directly related to earning assessable taxable income. So like when we're talking about accounting, like globally, accounting is very much the same. A lot of the like the baseline for taxes are the same when you're looking at what is deductible for a business. So basically, if it's meant to help you earn money, it is going to be a tax deduction. These are the standard IRS categories. They're kind of lame, not gonna lie. They're hard to fit TPT's categories of like all the different things that you could spend money on. Like advertising, okay. Contract, like you're not really having those. Commissions, okay. Contract labor, sure. Depletion, what's that? Depreciation, no. Like all of these, like there's not that much room, but even though there's many categories here to choose from, you're not limited to these. There is this other expense line, which will take you to page 2, where you can list them out, where you can add product photography, add website design, add clip art, add bank charges, all of those sorts of things. We also have categories in your business transactions where we have our own essentially chart of accounts that we like to use that is a lot more inclusive of what the TPT seller typically has. And there's a lot of information there, and I just dropped it in the comments for you guys to download for yourselves. Oh wait, accidentally sent it only to Megan. Just kidding. Try that one again. Let's see. All right, that one's to everybody. Megan was the lucky, got it first. All right, so this is for those of you who are not Doris, how come I see you on the screen? Doris, are you mucking up my screen? How did this happen? There should not be red lines. All right, somebody help me figure out how to stop that part.
I'm sorry, I didn't mean to do that. I was trying to click my chat button and I pushed the wrong button. So sorry.
That's okay. I'm gonna see if I can fix that. I don't know if I can fix that.
All right, I can, let's see if I can undo. I'm trying. Sorry.
Okay.
Shoot. I have no idea what happened. I'm on my phone and I clicked a button and I was trying to get out of it.
Okay, I've got it. I'm erasing them.
Thank you.
All good. Okay. Okay, I think I've changed settings where I think that won't happen again. Perhaps. Okay, so, well, we've got a couple little red lines still. Oh, those are gonna bug me. So, this. This is my, there we go. Okay. So for those of you, sorry for the interruption there. So for those of you who are not, or watching this, like that aren't on the call right now, who did not just get the document, that will be on our website for free, that you can just download. And yeah, so that, go through that. If anyone else has like ideas of business deductions, or if you have any questions about like what could be deductible, go ahead and list them in the comments. But I mean, I think they're fairly self-explanatory for all of the major ones. But we're going to talk quickly now about the home office mileage and any sort of split use, which is usually where people have the most trouble. So home office, that is when you use it regularly and exclusively for business. So in the US, it needs to be regularly used for business and exclusively used for business. So if you have like a day bed in there, kind of a red flag. If you've got a cat litter box in there, the IRS, there is a court case where the IRS has like negated a home office deduction because there was a cat litter box in there. I'm not kidding. That's part of my fun continuing education information that I get to learn. So make sure that it's used regularly and exclusively for business. In Canada, I know that it is like a less, like you, it doesn't need to be exclusive, but you would then need to figure out like the percentage split of business use versus personal use, and then kind of figure that out from there, in addition to the business use square footage percentage. So that is a typical tax deduction. Mileage, you kind of need a home office to make this one work, because your first and your last drives are considered commuting and therefore not deductible. So it doesn't really matter where you go. The IRS always says your first trip is not deductible. So what we try to do is your first trip goes from your kitchen, where you're probably eating bonbons or something or cleaning up, is up to your home office to do something. And then, so like that first trip is like you walking up the stairs to your home office. And then your next trip to go to Staples or go to Dollar Tree or go to wherever you need to go, is the business deduction. And so same when you come home is that you go straight to your home office, drop off the things that you bought, like the reams of paper or pens or whatever. And then, you know, finish entering in your mileage log, and then your last trip is going back down to the stairs in the kitchen and doing whatever you need to do or watch TV. So that's the cadence of it. The tax savings for the mileage is really, it's like 19 cents in tax savings, like tax dollars saved as an estimate. So do with that information as you will. I have a preference to, if it is like a mile, I will not track that. That is not worth my time. I do not care. I do not want that 19 cents. That 19 cents is not for me. Don't need it. However, if I'm driving like 200 miles, then all of a sudden I'm like, well, you know, that is a great, like, for my time and effort into just reporting it, and what the business purpose was for, totally worth it. So don't over stress about the mileage if you only have like these tiny little drives and not that many of them. All right, the last one here is split use. Those are things that are like your internet, for one, your phone. Those are really the two biggest ones that people are like, I use this for business, but I also use it for personal. What's the split? What do I do with it? So some people like to put the internet in their home office, like as part of their home office. But you don't have to. Like, you've got an option with that one. You could, basically what you need to do is you need to figure out what your business use percentage is. So either in however much the bandwidth you're using, you can figure that one out. Or like, you know, how many gigs versus like the total gigs for the month, and how many gigs did your business use, and figure out that percentage. Or is it, what is the amount of time that I would be on it, like using the internet versus personally? You know, you can do from like a time perspective and figure out what the total amount of time that I was on the internet for versus the chunk of time that I was using it for business purposes. Get a business use percentage, apply that, to your full, the full amount of your like internet payment. That's how you do the split use. It's kind of tedious, not super fun, but can totally be worth it. It's the same for if you like bought your phone, it would typically be kind of the same. I mean, I guess it depends on if you're always on the internet on your phone or if you are offline on your phone using your phone. But typically that percentage is going to be the same. So if you bought yourself a new phone, it would still be that same business use percentage of how much you used it for business. And you get to use that percentage, apply that to the total amount of the phone. That make sense? Yeah? Some head nods? Excellent. All right. Estimated taxes. I know everybody always wants to know about estimated tax payments, so I put it in here. We've talked about your gross sales. We've talked about your expenses. Your net income is the result. So gross sales less your expenses gives your net income. This is what you are being taxed on, is your net income. And so when we are trying to estimate how much taxes you are going to owe, a general rule of thumb is 30%. Because that covers 15% roughly for your income tax. And again, this is a US based. And then 15.6% for self-employment tax. So that's why we kind of like have that estimate of 30% to kind of squirrel away for that. Oops. Clicking on the wrong spot. Anyways, your net income there. If you know what your net income is and you want a little bit more than just a rough 30%, you can use our estimated tax calculator, which is part of our bookkeeping guide, and is super, super helpful in estimating what your taxes are. I just did a whole bunch of Q4 no surprise meetings, which is basically tax planning at the end of the year to see what your Q4 estimated tax payment should be. And the ones where we didn't do a whole lot of extra tax planning or there wasn't a whole lot of changes, the estimated tax calculator was pretty spot on. It was only off by like $200. And that was awesome. I love when that happens. All right. Christy asked, business meals, are they 100% like when at the TPT conference, all the meals while we were there? No. So they have gone back. That was like a COVID rule kind of thing. So meals are back to only being 50% deductible. They are can still be a business deduction, and so you would still pay for the full meal from your business, but as far as the tax deduction you get is only 50% of it. So it's like 30% of that, of 50% of the meal. Sense in terms of what you pay taxes on. Nessa asked, is this the same when filing jointly for the estimated taxes? So yes, that is like, so typically people have I mean, it depends on how much money you make. But on average, the clients that I see, their effective income tax rate is somewhere usually between 12 and 15%. So that's like after all the deductions and everything, and whether they have kids and all of that. So 30% really is like a really good kind of baseline. If you are using our estimated tax payment calculator, you can come here and change the filing status to married filing jointly. And it will adjust the calculation based on that. And then Marcia asked, I have a full-time job in addition to part-time TPT work. And then for that, I also have this little button here that's new for 2025. where you can say, I have another W-2 job. And it's could be either yours or your spouse's, if you're married filing jointly, where you can check that box and it's going to adjust for that also. However, if your wages from the salary that you're getting from a regular job or that of your partner are being under withheld, you might still owe taxes even if you're making estimated tax payments. So this calculator and this rule of thumb 30% are really only meant to cover your business's earning, like this net income amount. So if you have other sources of income outside of your business, such as your wages, or dividends income and capital gains and any other investment income like interest in banks and stuff, then that would, those are not included in the scope of this calculator and this calculation. So if you're kind of worried about that, I do have a reel, if you go back through my reels, where you can actually, like I show you how to go back and check for check your own pay stub to see if you are being under withheld or not. And it's super helpful. And you just have to kind of look at your tax return and it doesn't take super long. All right, Marcia, at what point should a person start doing quarterly estimated taxes? So if you owe $1,000 in taxes, that's when the underpayment of estimated tax payment penalty kicks in. So if you don't think you're going to owe $1,000, so if you do this like net income times 30% is $1,000 or less, then you don't technically have to make an estimated tax payment, but you will still owe that money when you go to file your taxes. So at that point, you're going to be paying some amount of taxes at any point. But if you do this calculation, like this net income times 30%, or use the calculator spreadsheet, and it's going to tell you how much is due at this moment. And you look at your tax return, your history, and you're like, you know what, I always get refunds. It's always about $3,000. And this due at this moment is $2,000. Probably don't need to make an estimated tax payment if you have such a consistent history of always getting refunds. That typically happens when there's like many kids involved and there's like the child care credit and all of that, where it ends up working out that you get a bunch of refunds. But yeah, aside from being able to do a tax plan, these are guesses. It's an estimate for a reason. We are guessing what you're gonna have. Carrie asks, what do you recommend as an easy bookkeeping system software? I'm going to answer that a little bit later, but do know that it's coming. Christy, can we get in trouble for not paying them quarterly? How would we know? I have always owed and never made any quarterly. I've always paid them at tax time. Whoops. All right, so what you will find, this is your 1040. If you look down here, line 38, you have an estimated tax payment penalty. Kind of goes unnoticed. It'll just be lumped into the amount you owe. So some people might not ever know that this line existed, estimated tax payment penalty. So if you don't make your estimated tax payment penalty, make estimated tax payments, and you owe $1,000 or more to the IRS, some states that threshold's a lot lower. I know in Georgia it's 500. I can't remember what other state was like only 100. And I'm like, damn. Then you will have penalties. This is where they show up on your tax return. So when your tax preparer, or if you're the preparer, you're reviewing the return and looking at it to make sure that everything looks not completely out of whack. Look here. If there is a penalty here, sometimes if you follow the estimated tax payment spreadsheet, where you were making payments based on your net income, you probably shouldn't have that penalty unless it has something to do with an under withholding of like a W-2 job or something like that. Because there is a different form that you need to fill out properly that shows your like the net income with how much you paid, because that is like a different way of paying estimated tax payments that more line up with what the kind of fluctuations of like the TPT cycle is with like the back to school and all of that. Because the IRS prefers you to make equal payments throughout the year, but that's not necessarily how your business works. And so I prefer to make payments based on what my cash flow is because it's a lot easier and less stressful. So when I need to come up with $3,000, it's because I made like $9,000. I don't know if that math checks out. Nobody fact check me. I made it up. And so that is really the, did I even answer that question? I've always paid them at tax time. Yeah. So look here. I guess my answer is look here. And if you did follow the spreadsheet and you do get this back from your tax preparer and there's an amount here, ask them why. You're like, I've been making estimated tax payments based on my business's income. Why do I have an estimated tax payment penalty? Because you shouldn't. But there is an extra step as a tax preparer that needs to happen in order to report that properly and make sure that that penalty doesn't happen. Okay. Do the estimated tax payments have to be the same amount every quarter? Doris, excellent question. I do think I answered it, but I'm going to answer it hopefully a little bit more succinctly. The IRS prefers that they are. That is the default. So any tax preparation software that you might be using, like TurboTax, H&R Block, any of those online ones, even if you go to H&R Block or any other professional tax preparer, the default of their software is going to be equal payments. And so if we enter in, or you enter in, or they enter in the estimated tax payments and they are not equal because they fluctuated with your income, the software is going to automatically spit out an estimated tax payment penalty. And we don't want that because there's just another form. It's form 2210, I believe, where you like report that. And then you're like, haha, 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 I don't need to pay penalties. And I match my cash flow and it's fine. So as long as you're doing that, now that is fine, as long as you don't owe that more than $1,000. And so there is a risk if you have other like big investments that had like big capital gains or you're super under withheld in other wages and stuff. That's where like you could still get caught and still have a penalty, but it would be less because the portion that you had for your business would already be like accounted for properly. So it reduce it in that way. Okay, I think I answered all those. All right, now we get on to Carrie's question. What tools are out there to help you compile all of that data? So we have things like QBO, it's probably the most expensive option. Xero is another one. That is another bookkeeping software. It's a little bit more user friendly to non-accountants, but totally fine. Wave, I think it's free, but I haven't used it. And the last I had kind of looked into it, it didn't have some reconciliation features, and so I just immediately wrote it off. Oh, whoops. Honeybook, that's really good for invoicing. I don't think they have a reconciliation feature, so I also don't recommend that one. Airtables, I've seen people have great success with Airtables. You can use G Sheets, that's what our bookkeeping guide's in. Excel, basically a spreadsheet. You can also use our bookkeeping guide. We have a great bookkeeping guide that is all nice and like systematized with a whole like video tutorials on how to use it, what process you should be using like each month or when you do it, process for your bookkeeping. You can also outsource it. We love bookkeeping. We love it. Just be pleased. There's also another option coming soon that I'm going to tell you a little bit about, little inkling about, that those of you that have been on or seen in Facebook a while back, I was asking about names. So I am in the process of building my own app, my own bookkeeping app. It's called Moosetrack. But it's going to not necessarily rival QBO, but it is meant to really hone in on this community and in all of like the tax things that kind of go with bookkeeping that aren't necessarily incorporated in other like QBO or Xero other platforms. Like QBO does not have a way to like figure out your home office deduction. Like you don't track that. There's not an easy way to do that, not an intuitive way to do it. And so we're working on trying to come up with a better solution because I don't like people messing up my spreadsheet and the formulas. Kind of dangerous. So, but I do recommend the bookkeeping guide. Like if you are needing a system, it is awesome. And if anybody here has that, if you're able to comment that like, yes, this is amazing, and just like kind of like, yes, she is correct. It has helped. Super helpful. Kim, I don't think I actually did update the 2025 bookkeeping guide now that you mentioned it, and I'm going to write that down as something that I need to do. Had a busy start to my new year. Completely forgot. Awesome, Megan, I'm glad you like it. So this is the ultimate TPG Sellers bookkeeping guide. It's got like your financial reports. It's got your mileage log, your home office tracker, your estimated tax payments, how to read the reports, how to review the things, is your whole process on what to do, the spreadsheet itself. I think it's easy to use. I've gotten feedback that it's easy to use. Highly recommend it. It's about to go on sale for $150. I just haven't done that on the website yet. So if you wait a day, you'll see that if you're interested in that. All right, so now a quick, excuse me, a quick little shout out. So do we have any on the call right now? Do we have any non-US based sellers? Anyone like chime in? Either raise your hand or just be like, me. No. Okay, then I'm going to burn through this real fast, and if people ask me really nicely if they're watching the recording of this, I might do a separate topic just for them. But for non-US based sellers, what's your US tax obligation? So non-resident aliens, if you don't live in the US, you're not a green card holder, you are not a US citizen, you would be considered a non-resident alien. And so the three things that you need to be concerned with are the effectively connected income, the 1040 NR, which is the tax return that you would need to file, and sales tax. Those are kind of like the three considerations. And Jackie, the bookkeeping guide's on my website. But wait to buy that because I need to put it on sale. I meant to do that earlier, and then I got trapped in my scrolling of my own reels. It's just kind of funny. All right, so effectively connected income. What the hell does that mean to the IRS? So if you have services performed that are outside of the US, you're fine. Don't worry about it. If they were performed in the US, then you would have a filing requirement of the 1040 NR, and you better have work authorization to work here, because that would be a huge immigration issue of if you worked here when you weren't supposed to. And so this is based on where services are performed. So even if you're a VA and you are vacationing in the US, like say you're like, you know what, I want to go to Miami, going to Miami, vacationing there. And you're like, oh, well, I need to do this project for somebody. You are now performing services in the US. And you are now violating the like what you told the border guard when you came in, like the TSA agent, when you're like, I'm here for vacation. That's a big no-no. Don't do it. And also enjoy your vacation. Now, if you do, are they going to catch you? Probably not. So do with that what you will. But know that that's an issue. So digital products. Nope, I did not. Here we go. So do you own or lease a server? Okay. So this is where it gets a little tricky. TPT server, no, you don't have any control over that one. Your website's hosting, though, if the server there is located in the US, you have now established a presence in the US, which is now you would have a filing requirement. So if you're outside the US, like if those things are outside the US, you're fine. If you don't have any control over it and that's like not what you're paying for, like TPT servers, don't worry about it. But if you're like, oh yeah, my hosting is actually in Texas or Arizona or wherever, then you're like, crap, I do have control over that. Now you do have a filing requirement. So the filing requirement here being the form 1040 NR. So it's basically a tax return where you report your US sourced income. You don't have to do your worldwide income. That's for your home country. but you would have to report your US source income. And then I'm gonna skip that slide, don't worry about it. Sales tax, if you only sell on TPT or other marketplace facilitator like Etsy, you don't have to worry about sales tax. If you sell on your own website, then you are subject to each state's economic nexus rules. So that is kind of like the big one for the non-US sellers. If you are a stateside seller, you also have to contend with physical presence tests. So be mindful of that. Now, this whole presentation was meant to be a get ready for tax season. And so being organized today means a fresh, stress-free tomorrow, or stress-free tax season, you probably should have said. And so that I want to talk to you about my tax readiness hot sheet, which is only $17 right now. And this is a 2-pager that your tax preparer will love. And if that's you, you will love you even more. Because this organizes all of the, like, summarizes all the information that you need. Like, if you got the bookkeeping guide and this, you would be like done, like amazing. For those super small sellers where you're like, I barely have any tax deductions, it takes me like an hour to go through my accounts and then summarize what my expenses were and then just plunk them in here. Totally worth it. This is how you get organized for taxes. It's got all of your sales, all of your tax deductions, any mileage you had, any home office deductions, all the information that you need in order to claim the home office deduction that your tax preparer needs, and then a record of all of your estimated tax payments. Super duper handy. Oops, I guess I already went through that. So that is my presentation for you. And so now we're going to get into the Q&A. So does anybody have any other questions before I figure out what the Facebook questions were? All right, so since you need the internet and let me move you over here. Let me read. All right, so no. There we go. Okay. So since you need the internet, how does one deduct that? So that would be one where that's that split use where you figure out what the time, if you've got to use bandwidth or time or some unit of measure, where you would have like, what's the total amount of time that the internet is in use or being used or possibly available to be used? And then how much of that time is business? And then you would just kind of get the percentage of that and apply that to how much your internet was. Does that make sense? Good. All right, Ashley, with multiple income streams, do you combine them on the 1099 or does each income stream require its own 1099? I think I'm a little confused and it's possible you might be a little confused. So you don't issue any 1099s for your own, probably for your own, like your own income streams. Those are just things. So like you might receive a 1099 from PayPal as a payment processor. You might receive a 1099K from Hyperwallet as a payment processor. You might receive a 1099K from Venmo as a payment processor. And you might receive a 1099 NEC for VA services that you provided to somebody else. Those would be like, you would just start like accumulating those. So they're not necessarily based on like what your revenue stream is. They're more based on where that money came from, like from which company.
Sorry, I think I meant Schedule C.
Schedule C. Got it. Okay. So with multiple, got it. This makes way more sense then. Thank you for chiming in. So that would be if you're operating a business with multiple revenue streams, if they all are kind of in the same like business, you would just need one Schedule C. So like if you had VA services as well as selling on TPT, those are two different revenue streams. And then you also had maybe affiliate marketing for teacher products that you're getting people to buy also for like on your blog. Those are 3 different revenue streams. That's all one business. So you would just have those all reported on one Schedule C. The only time you would have like different Schedule Cs if you had like completely different businesses going. So if like you started a YouTube channel about dogs that only walk backwards or something, you know, like something crazy, that's something different. But I think to
Well, if
answer your
it's like
question,
in the general like teaching
in
realm,
the
I
general
can
thing, yes.
group it. Okay.
I mean, you can think of having different business units, too, right? Like there might be a coaching component and then also selling like t-shirts and stuff that like you've kind of branded. Like I know there's a lot of creators that do that, not necessarily in the TPT space, but where they're like they've created like a brand and then they're selling t-shirts, but they also have coaching, and like those are all part of like the same business endeavor, if you will. Excuse me. Okay, wait. All right, Leslie. I know home office can be written off, but how about a vehicle lease? So if you have mileage, then yes. But that is a more complicated than what this presentation is kind of ready for. But as far as vehicle leases go, if you're not having mileage that's like above 50% of business use of the time, then you're really just taking mileage as opposed to actually kind of calculating what like the lease is. Because it gets kind of complicated depending on. So that might be one that if you want to schedule some time with me and have a discovery call, we can either see how I can help work with you and have some tax strategy session, or see if I can answer that kind of more on the call specific to your situation. Megan, where do I go to start paying taxes quarterly? How do I start? Okay, so if you do a Google search, so one, I do have a reel about this. But if you do a Google search that says pay IRS taxes, it's the first one that's going to pop up is irs.gov. So if you're going to be paying a government, make sure it's a whatever.gov or whatever their like government site is. So it's irs.gov/payments. And then like that's where you go for that. It's super easy. And if you make a comment in the Facebook group in like on the post, or I can send you the link to that specific video where I showed you how to do it. It's kind of like a step-by-step, super easy. All right, this might be a silly question, but do you have to make a certain amount to claim a certain amount of deductions? Like maybe, though I'm proud of my first year on TPT, I did invest to get there. So no, so like if you spend more money to like make money, but you spent more money than what you made, that all still happened. That's still part of the business. You would just have a business loss, which means that you definitely don't need to make estimated tax payments because you didn't have income to pay. The only time I would be concerned about that is if you were doing that, like as if the motive behind that was to take a loss as opposed to trying to generate a profit, which I don't think is the case for you. So my answer to your question is no, there isn't a certain amount. If you invested $20,000 and only made $100, like I hope that investment pays off in year 2, but you can still claim that $20,000 deduction. All right, at this point, I'm just kind of going down. At the end of your presentation, you mentioned that we do not need to collect sales tax if we only sell on TPT or other marketplace facilitators. One, that was at the end of the non-resident section, but that applies to US sellers, also correct. No, not necessarily. Some states do require you. I can't remember which one it was. It was somewhere in the Northeast. I can't remember off the top of my head, but I'll have to find it. Might have been New Hampshire. Where even if you had like only sold on TPT and they're a marketplace facilitator and they've reported all of it and that was your only thing, they still require you to file a form also, which is basically a zero return where you would say, this is how much I had, this is how much the marketplace facilitator submitted. My contribution is zero. I don't have to do anything, but they still require you to do it like on a monthly or quarterly basis. But I can't remember which one that is. So definitely check with your state. That is, Michael, yes, that is only if you live in that particular state, because you've like hit a physical presence, like you've hit the physical presence test. The marketplace facilitators also like are make it easier for like the economic nexus of if you do not have a presence in that state at all. Number two, if you were to sell TPT and another marketplace facilitator such as Amazon KDP, assuming they collect sales tax, they do, are you still not expected to collect sales tax? Correct. Except for in the situation where in terms of like filing it. So collecting it and filing it are like two different things. Awesome. Okay, Nessa, I filed jointly with my husband. He works full time, and since last year, I've been making reasonable money on TPT. What would be a fair and reasonable amount I should set aside for this side hustle? Should I save the same percentage as our joint income tax bracket, for example? Our tax rate is 32%. Does that mean I should set aside? So your tax bracket is not necessarily what we are looking at. If you do a count, like if you post in the video, in the Facebook post that I had of like, hey, do you have that video about calculating tax rates? I will send it, I will link it for you. Because the 32%, if you're in that bracket, that's not necessarily what you're paying as a like on average. So that's like the highest bracket that you would be in, and like the step up of this section of income is taxed at 15%. This section is taxed at like the 20%. This tax, like each of the step ups. So it's not necessarily the 32%. You might be more at like the 15 to like 19% on average potentially, but I don't know that because I haven't seen your tax return. So if you are ever worried about how much, one, go look at the video and that will probably help you feel a little better about it. Or two, just withhold more. Just withhold a little more. That's it. Or get our the bookkeeping guide that has the estimated tax calculator spreadsheet, and then you can see. There are also like other free options too. Like I know TurboTax does have like a good online estimated tax calculator thing where like you can go through and input a whole bunch of more extra information. It just takes like some time to do. Christy says, I'm in the same situation. I've done the 30%, have been almost spot on, but it is 30% of your actual income. So gross minus expenses. Awesome. Thanks for answering that, Christy. I'm no longer in the classroom. I stopped in August. I used to have extra taken out of my paycheck to cover my store, so I didn't have to make estimated tax payments. Could my husband do that for his paycheck? Yes, he can. You can do the same thing, whatever you're added, like whatever that additional amount that we had updated your W-4 to, you can just do the same thing for him and then just make him withhold the taxes for what your business is making, which is a great way to do it because then it comes out like more frequently than the quarterly part. Oh, how did I miss any questions? I think I got them all in here. Okay, I think I got those. Let me just check Facebook real quick. So we have okay, question. It's kind of a sales taxy one. So it says under the managed tax settings on TPT, it has a list of all the 50 states, and some are grayed out that TPT will automatically collect and remit sales tax for us. Of the states that are left, some are Oregon, Missouri, Montana. Do I need to go and see if I meet Nexus last year and check those if I need sales tax to be collected for this year? A lot of those, my guess is going to be that like they don't have sales tax or don't charge sales tax for digital products. But I would recommend going, if you're concerned about it, going and looking at each one. But I believe every state that charges sales tax has marketplace facilitator laws in place where like they would be required, like TPT would be required to do that on your behalf. So, a little bit of research there. Carrie Ann asks, at what salary should a seller be paying quarterly taxes? not sure what you mean by salary, probably your net income for your business. And that would depend on the rest of your tax situation. But again, if you go to earlier part of this recording, the like that net income amount times the 30%, if that is higher or lower than the $100 or $1,000, I mean, you should be paying taxes or quarterly taxes on that. But if you wanting to budget more, like, you know, don't wait until it hits 1,000, because you can still make payment like a $500 payment if you wanted. I think I've kind of answered. I will be converting my business from a DBA to an LLC this year. It will still just be me. How do I pay myself? Do I do payroll taxes and send them to the government quarterly, or is that included with the quarterly taxes for the business? So those are different things. So going from like a sole proprietor DBA to an LLC doesn't change your taxes whatsoever. You are still filing on Schedule C. So that means you are not on payroll. Do not put yourself on payroll. That is very wrong. And you will be paying foreign taxes. Like, it's just not, don't do that. You'll be paying more in expenses to try to have that done. You are not allowed to be on payroll as a sole proprietor. So how do you pay yourself is you just transfer money from your business bank account to your personal account. That's all that you have to do. Nothing's changed. Unless you've elected to be an S corporation for tax purposes, in which case, then you do need to be on payroll. You do need to be on payroll. Hopefully that answered your questions. I will be asking of, okay, wait, no, we've already answered that one. Answered that one. Bethany, if you are here, I believe I've answered your fuzzy area question about write-offs in the split, like the internet and the phone and all of that kind of stuff. Marcy, I'm not going to read all of your things because I assume that you answered them. Is that correct? Like the amount or the what you posted on Facebook? I'm going to assume yes.
Yeah, I just it would work the same way for just like a laptop purchase, right? You just
Yes.
split. Okay.
Exactly. Yes, that would be this part of the split use.
Okay. That was my question. Yeah. Thank you.
Okay, that is all of the questions that I had here, other than will it be recorded? And the answer is obviously a yes, because I have been recording. Does anybody have any other questions before I let you go for your evening? Feel free to unmute yourself if you want to just chime in. But we're good. No one has anything, then thank you so much for your time today. I've enjoyed this. I love talking about taxes. So if you have any other questions, please drop them in the Facebook group. Happy to answer them. I'm on social media again. I had removed them from my phone for a while. I was on quite the hiatus, but I'm back present and trying to help where I can and answer some questions. So thank you so much for joining me. I hope you guys have a good evening. Bye-bye.